In this video, traders, we're going to look at using the VWAP to stay in your winning a day trade. Some strategies and ideas to trail those winners. Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so VWAP, very powerful intraday trading tool. If you've not explored it yet, it's well worth looking at. Volume weighted average price. Okay, we're going to go into a little bit more advanced stuff here now. So if you're already using the VWAP, this is just some ideas on how to trail your stop. I've done other videos on how to use them for entries, how to use them for exits, how to do all that kind of stuff. This is more to do with, hey, you're already in a trade, you've already taken a trade, a setup strategy, whatever it is, you're in it, it's in the cruise. Now you want to manage the trade on an intraday basis by trying to get as much out of it as you can, but trading a stop. So trading stops, we can use moving averages, we can use kind of percentage from highs, all that kind of stuff. This is using the VWAP as a kind of foundation for a new formula. Now, VWAP is really something that everybody is looking at. So how can we integrate it with our own trading strategy exit? So some good exit point ideas. Now I've separated them to two and I've kind of put a dotted line here and you'll see why in a second. So the first one will be high minus VWAP divided by 2. If you are in a decent trade and it's pushing well above the VWAP, you're in a nice trend, you've got a nice position, you bought a double bottom, you bought a bull flag, whatever it may be, you're in the cruise, it's running nicely, it's kind of congesting at highs, you're getting a bit twitchy, you think, could it retrace, could it not? You need to allow yourself a little bit of wiggle room, but you don't want to allow yourself too much. Now, the beauty of the VWAP, guys, is this. If I've got my purple pen, here it is on the desk. The beauty of the VWAP is that as price goes to high, less volume, it kind of gets to a level where it's accepted. You know, volume starts to dry off, doesn't it? It starts to dry off, it starts to accept at high. That's not going to affect the VWAP as much as the moving average because it's volume weighted, which is why this is so powerful. So your VWAP is probably going to stay reasonably flat because a lot of the trend, a lot of the volume was done on the drive up. So it's going to be the average of that. When we start kind of sitting in the top and we're chopping around maybe at lunchtime, you know, it gets a bit quiet, volume starts drying off, that's going to have less of an impact on VWAP. So VWAP is going to remain flatter. Now, of course, if you're using a moving average, it doesn't take into account volume. So a moving average is going to start coming up and matching price. Eventually, if price stays there and just doesn't do much volume and chugs along long enough, the moving average will catch up to it. And the disadvantage of that, of course, guys, is that if you're using a trailer based on a moving average, you're going to get stopped out. Right, so what do we do is we use a VWAP instead of a moving average, and we say to ourselves, okay, if we're in that nice pleasant position where we're holding at highs, we still want to trail it, but we don't want to get pinged out on just nothing, on just some noise, which we could do if we use a moving average. And also we don't want to use a moving average because if this stays here for the next 3 hours, we don't want to get pinged out. We still want to have that flexibility. So we use high minus VWAP divided by 2. So what do? We take the high level here, we take the VWAP, we just take the midpoint between the two. That's all that's giving us. It's the midpoint between the two. So as price stays there, VWAP may well stay flat. You're going to have that static. It's going to trail, but it's going to be static. But then as soon as volume comes in, VWAP will start to increase and tighten up. What does that mean? It means that if we start to get volume, kind of a bit more aggression, sellers but buyers are holding it, VWAP will start to kind of drip up, tightening up your stop, which is what you want because you've noticed some sellers coming in. If it starts to push off to new highs and new volume comes in, then VWAP is going to push up as well with it. So that's a nice way of doing it. If you want to give it a little bit wider, if you want to split your stop into 2, which is quite a good idea as well, you can use just the VWAP. Pretty obvious, pretty self-explanatory that. We just have our stop at the VWAP. Okay, for many people that's quite wide, so I would suggest that's probably more likely if you're swing trading and you're using this day trader's entry for a multiple day move, because the VWAP probably is going to give back most of your gains, if not all. But the advantage of that is if it's a genuine trend day, you're prepared to give some back. It's going to keep you in on a genuine trend day, allowing you for a 2 to 3 day move after that trend day. We often get that first initial impulse move, then we get 2-3 days move, then we get kind of the backfilling. So that is a good way of getting you onto that multi-day move without bringing your stop in too tight, but quantifying it in a reasonable level that everyone's looking at. Okay, another one, number 3, guys, is a 15-minute close the other side of the VWAP. So if we're talking long, a 15-minute close underneath the VWAP. Again, this is quite wide. This is something for those of of you who want to look for a multi-day move feel like you might have a nice entry on day one, want to give it a bit of room but don't want to give it a massive amount of room like below the low of the day, want to kind of use a benchmark that makes sense, don't want to use that moving average for reasons I talked about earlier, this is a good way of doing it. 15-minute close below the VWAP if you're looking to go long. Okay, number 4, a 20 moving average, a 20 period moving average cross the VWAP. Now this is a kind of hybrid of the two things we talked about. A 20 period is going to obviously track price for the average of the last 20 periods. So if you're using a 5-minute chart, wouldn't recommend going any lower than that. 5, 15 maybe too high because it's not going to give you long enough, but you're looking at intraday, a 5-minute chart's the sweet spot for this one. 20 period moving average is going to hug price. Now what that allows is this, it allows price to kind of, this is also obviously going to depend on your entry and where you are and kind of, you know, what your kind of objectives are for the trade, how much room you're prepared to give it, risk, etc. But what that allows you to do, it allows price to come back down, test under the moving average. If we say this is our moving average, will kind of follow price later, but it allows it to have a sharp move lower and a pull back up and not get pinged out, because the moving average will curl before it actually crosses the VWAP. So it gives you that little bit more room. Again, this is a kind of for someone who wants to give things a little bit more room, maybe for a multi-day move, doesn't want to be so finite with it and so aggressive like this kind of stuff, which you might do from a more intraday perspective. But this one, when you want to say, or the top one from a intraday perspective, should I say, this one more for a swing. This is more to say, hey, you know what? I need to give it a little bit of room. I need to allow this room to breathe. I want to see how price responds under the VWAP. I don't want to come out of it with my VWAP tag or my 15-minute close. I'm going to use a moving average. Maybe I'm going to use you can go even higher than that if you want to. But the point is I want to see how price responds. Give it opportunity to find some buyers below. If it does and lifts back up, then great. I'm in a nice position. I've had a bit of room. So it's giving that bit more flexibility. But obviously your target for this is going to be, you know, way up there. You're looking for multiple day moves on this. Okay, and the final one we've got here is the VWAP cross range divided by 2. What do I mean by that? So if the range is, let's say we've got a 300 pip range, generally speaking, if we're in the upper end of the range, the VWAP is going to be to the high side. If we want to give this a little bit of room but not too much, and we want to kind of allow it to dip down on low volume but not on big volume, what we can say to ourselves is, hey, if the VWAP crosses back down over that midpoint or through the midpoint, we're out of the trade. So this is a little bit more aggressive. It's not giving us so much room to breathe, but what it does mean is that, hey, if we're in this trade, we either want this to continue higher, or if it does continue lower, it's got to be on a lower volume. I don't want to see many participants smacking this lower. I want to see a lower volume drifting this lower, which won't affect the VWAP too much. However, if we do get a bit more of an aggressive move to the downside and there's some volume, the VWAP will eventually turn. And it also protects us from that immediate spike lower. So we might get a little bit of a blip that comes straight back up. That's not going to affect the VWAP. The VWAP's not going to cross below that midpoint, so it's going to keep you in the trade. So the beauty of some of these is it gives you some room to keep you in the trade. Like I say, it's not for these scalpers out there because it's giving yourself some room to breathe, but it's kind of saying, hey, you know what? If the majority of participants start to disagree with my thesis and the majority of participants is the VWAP, so to speak, if that starts to disagree, then I'm coming out. If it agrees and everything's fine and it's just short-term price ping-pong back and forth and noise, I want to stay in. Of course, that gives you a little bit more risk from time to time, but it keeps you wide enough that you're not getting pinged out on noise, like I say, but keeps you in the trade if it's going to be a multiple day move, which this is what kind of thing is perfect for, those multiple day moves, and you think you're on a nice sweet spot with day one. All right, guys, staying in winning day trades using the VWAP. See you next one. Take care. Keep your risk managed. Bye-bye.